What is happening, everybody? It's your boy, Sean McLaughlin, and your other boy, Steve Strazza. Do you miss us? It's been a while. It's been a while since we've done the Flow Show. Strazza, how long has it been?
I think December. We took a hiatus.
No,
Like I think
that's
it's
too long.
almost a month.
It's been very spotty. We had a holiday on a Monday. We were in New York City last week for our Portfolio Accelerator event, which was amazing, by the way. So we've just been the calendar has been conspiring against us. I hope you guys are doing okay. I know we have a couple super fans, and I know that they get a little twitchy when we're not around.
Well, we were with some of them last week.
We were with some of them. Yes, that is true. And one of them, by the way, one of the guys from the Accelerator event is going to be in Boulder and hang out with me later this week. Just side note.
Awesome. You guys
Yeah.
go for a hike?
Brett, shout out Brett, Grumpy Trade Brett. He's going to be there. He's going to be here. Anyway, hey, so this is the Flow Show, and what we do, the 2024 model of the Flow Show is Strazza and I basically take you through how the sausage is made, how we come up with trade ideas in the All-Star Options service. Strazza, throws a bunch of ideas at me. I either tell him they suck or they're great, and then we figure out a way to trade it with options. I think that makes sense, right? Is that how it is?
Yeah, we're just trying to walk through a trade. And I mean, did you put any on last week? We were kind of busy.
Yeah, we had a busy week
Nope.
last week, actually. Not busy, but we put on a trade in Taiwan Semi. We put a trade on Cadence Software, CDNS.
Let's tell them what we did. So we basically did like a live flow show at our event.
So you are correct. So while we did not do a Flow Show on the interwebs for all of our super fans to see, we did do one at our event. Me and Straz took the stage, and we did a live Flow Show for the people in attendance there, and that was great.
And it was fully interactive. It was awesome, right? Because we were like taking suggestions and questions and stuff from the audience. Like Steven Weitzel helped come up with like a really cool like rig trade. So that was fun. And then Sean went ahead and just put the trades on live. Would you buy like one lots?
I did, yeah. I went really small. We did a trade in rig, I think, and we did a trade in snow. One of our attendees wanted to do an aggressively bullish trade in Tesla. I just pulled up the Tesla chart on my screen ahead of Tesla earnings. I don't think that trade would have worked out for him. At least it's not working out yet. But
did you want to buy puts though?
He wanted to do. We talked about doing a bearish ratio spread where we sold the 210 puts. This is all options that expire end of this week coming up, so Friday. We were going to sell the 210 puts and buy the 190 puts, buy two of them. So a 1-by-2 ratio spread that, sitting where it is right now, the trade would be basically at max loss if it stays here. So not good.
And what about, we put a trade on this, last week? You said
we had an Iron Condor on in this trade. We had this trade coming into last week. Unfortunately, it didn't work out. We got stopped out. 187 was our stop loss level. We had an Iron Condor on, and a close below 187 was my signal to get out. And we had that on Thursday, so we exited the trade on Friday right there. I may regret it, but hey, rules are rules.
So, all right, this is a good topic. We got into that trade because I think you came on to one of our calls and you said, what's the messiest, stock that we could bet on sideways action?
Yep, that's what it was.
And this thing, I mean, I got it up here. You got it right there. Absolute mess. Sean, what moving average is that? Is that a 200?
That's a 50-day.
50?
Yeah.
200 sideways, the 50 sideways. They're all sideways. This thing's, an absolute mess. Do you think maybe that stop was too tight? Because this thing's still an absolute mess. But I guess we had it, like those pivot lows, or no, you said 187. Oh, it's so close too.
Yeah, I mean, look, in hindsight, maybe it was too tight, but that number was chosen for two reasons. 187 was chosen for two reasons. Number one, that was our break-even level at expiration. If we held this spread all the way to expiration, That would have been our break-even level. Also, if you see on my chart here, I mean, 180, or basically we were looking at this level here, and really I didn't even want to be in this trade if we were below 193. I gave it to 187 because that's where my break-even was.
Yeah.
But honestly, any level below 193 is no good, and we're still below 193. So,
Yeah.
I don't want to be in that. Even if I still had the trade on now, I wouldn't want to be in it. I'd be looking to get out.
You gave it plenty of cushion when you think about it. And look at how clean that was, right? So that's actually a breakaway gap to the downside. I don't know whose screen we have up, whose charts we have up, but we're both showing it here, right? The pivot lows from October of last year pretty much was the high of the day following the earnings miss, the big gap there. Right?
Yep.
So, all right, let's talk our book a little bit. Did you like any of those trades, in particular that we did last week?
Snow was the one that I liked the most. We put a bull call spread on in Snow. Still like this one.
So why did we put a bull call spread in Snow?
So we bought, okay, good question. And we went through this for our attendees at the show. We bought May options. We bought the 210 calls and shorted the 240 calls. And the reason why I did a bull call spread versus just buying the calls straight out is two reasons, actually three reasons. The easiest reason is that this is a little bit more of a higher priced stock. And so options, even when volatility is low, in volatility terms, they may be cheap, but still in absolute dollars, they're a little bit more expensive when you're looking at the most expensive stocks. Sure. So that's number one. Number two, I didn't like where the implied volatility is. If you see at the bottom of my chart here, implied volatility is not screamingly high, but it's kind of in the middle, right? It's in the middle where it's been over the past year. I generally only like to buy calls when we're in the lower third of the pane, so to speak. So in volatility terms, the calls were a little bit more expensive. And then finally, and perhaps the biggest reason I wanted to do the spread is that while we were hashing out the trade last week, we were talking about how 245, I believe 240 to 245 was kind of the upside target, right? Because I think there was a Fibonacci level that was coming in up there. Right and here. So if we were going to hit upside resistance around 245, oh, there you go. On your chart, you can see it on your chart. It's a Fib level, also a price level that has some memory.
Yeah, gap from 2022.
Right. So that being said, I said to myself, well, hey, if we're going to likely run into some resistance around that 240, 245 level, I might as well sell that strike call because we might not get through there. And so for me, creating the call spread gives me a better odds of success. And that's what I'm going for here. I'm going for better odds of success. I'm not going for the biggest win on the board. I'm just going for better odds of winning. So there we go. How'd I do?
So that's why we use the spread. And the reason why we even wanted long exposure to this name is because this pattern looks a lot like all the other reversal patterns that we've kind of been leaning against since last year now.
Yeah.
All right. Some other ones that stand out. Listen, the banks won't go away. Some weakness early on in the year through earnings season now. This is KRE, the Spider Regional Banking ETF. So what are we seeing here? This is the reversal pattern, right? So if you see on the left side of the screen, that was what they call the regional banking crisis last year. First Republic, Silicon Valley, boom, boom, boom. Okay, nice base formed. Reversals in. We all got excited about buying the banks here. I bought probably too many calls, which are still not working, simply because we had this little throwback here into January, right? So you can see kind of the highs from August of last year. Now the pivot lows around that 49 level in KRE, they really held. And it looks like this is just one of those patterns that we see so often in bull markets where you had this little short-term continuation here. And it looked to have resolved lower, for a day or two when earnings first started coming out mid-January. And then just a swift rebound higher. Now it looks like a continuation pattern that's about to move up. Ready for a next leg higher. I think the same vehicles, Sean, that we've been involved in, probably the ones we want to continue to focus on. KeyCorp.
Yeah, we had
now,
positions in KeyCorp and Wells Fargo and got whipsawed out of both of them 2 weeks ago, which is a bummer.
Yep.
Yep, look at those. Look at those whipsaws, man. That's what do you call that? Stop hunting season? Is that what happened there? There were some stop hunts
Absolutely.
going on.
Absolutely.
Man,
I
we
mean,
got caught in that trap.
it's the shake and rally, or what do we call it on the morning show today? Scoop and rally. So you got the base, right? Looked like a breakout, short-term continuation, and Wells Fargo really looked to be resolving lower, right? Back in the box and just scoops, rips higher. I think you got these pivot highs here around 50-50. This one's still plenty actionable. And JP Morgan, we were talking last week, from an intermarket perspective, I feel so much better owning banks or having long exposure to banks if JP Morgan could just get this breakout in the books already, right? So they had a pretty good report a few weeks ago. Still struggling with this overhead supply at those 2021 highs. If you
That's
want
a weird.
information, yeah,
That's a weird candle. A couple of candles in JP Morgan about a week and a half ago. It doesn't show up. Yeah, it shows up in your chart right there.
that was the earnings scandal.
That's what. Yeah.
Started to go, made a new all-time high, and then ugly. So now it's taken a couple weeks to kind of work through that. If and when JP Morgan breaks out, I think all day you want to own banks because you want the leaders to lead.
So let's talk about these banks for a second because I'm a little gun shy, and here's why.
Talk to me.
All these charts a month ago looked great, right? These look like the kind of breakouts that we want to buy. That Wells Fargo chart, this KeyCorp, these all looked great.
Yep.
And here's where my hesitation is, Straza. When they look great and we get positioned and they're doing what we want them to do, and then we get this shakeout that we just had.
Mm-hmm.
I feel like that portends to something. And I'm not exactly sure what, but it feels to me that that was the action of a lot of people that were looking for an opportunity to sell. And did they get rid of all of them? Maybe. But that's not the type of action I want to see if I want to take a long-term bullish position. Now, maybe I'm just being a wimp, and it's totally possible. Totally possible. I have what's that? Cognitive bias or recency bias, where if I get whipsawed, and this is maybe a character flaw of my own as a trader. Like when I get stopped out of something, I very rarely will go back to the well and try it again. Like fool me once, fine, shame on me, but don't fool me twice. That's happened to me too many times. Yep. Maybe we need to bring a trader psychologist on this call to talk me into like stop being a wimp, perhaps. But I don't know. That's action I don't like the C-Stras. If it tells me, I feel like there's something else going on there, and that was the tell.
This is a good conversation because I'm the opposite way. And it took me a long time to get that way.
Uh-huh.
I'll get stopped out of something like 4 or 5 times. Like last year, Coinbase, before it worked, really late 2022, I stopped out 2-3 times. Thank God I kept getting back into it. Right. Yeah. So I think it is. And I think it comes down to everybody's just different. Right. It used to drive me crazy when I would get stopped out of something and then it would work. And finally, somebody said to me, just keep it tight, get stopped out over and over and over again. Just treat it as a new trade. Like, what's the problem?
Yep. Well, the good news is, Straza, is if we do want to get back into these, I'm looking at KeyCorp, I'm looking at Wells Fargo, I'm looking at JP Morgan.
Cheap.
Yes, the options premiums are even cheaper now than when we last got in. So if we want to take another swing, maybe we do a little further out this time. Maybe give it a little bit more of a stop. I mean, maybe we use those lows from early last week as our stop. It's a little, I don't know.
All the way down to 13. I don't think you need to. 14.
You think so?
Look at my chart, right? It broke lower from this. This is a flag. It started in mid-December, right? It broke lower, then it's back into it. You don't want. I think you use the lower bounds of the flag, so the pivot lows from early January, late December, 14.
Okay, all right. I don't hate that. And then again, tight stop, so we're not going to risk a whole lot.
Yep.
Where would you pull up that Wells Fargo chart? Where would you put a stop on that one? It doesn't seem as obvious. Maybe 48.
You don't want it back in that base, so I would use the base breakout level which as you can see here, it's a little range between what, 40, 48 and, 48.50, 48.60-ish. Yeah, so use this gap here, the breakaway earnings gap.
Yeah.
48.50, 48.40. And it's the same sort of thing as Key Corp. You really don't want it back in that base though.
All right. Now, here's the question, Straza. With volatility being as cheap as it is, earnings out of the way, that's great news. We can go pretty far out in time. I mean, it's affordable to do. I mean, we can go out to January of next year. So a year from now, basically. And looking at Wells Fargo here, let's see, the 60 strike, which currently sports a 28 delta approximately.
Oh,
You could buy those 60s for about $1.75 right now, maybe maybe a couple pennies more.
60's perfect. So that's 10 on 50. So that's a 20% move, almost exactly a 20% move from where we are today, 50 and change. And 60's perfect because that's the next real level of big overhead supply. So that's the old highs from February 2022.
And if we clear that, then we're off to the races.
Hell yeah.
Yeah.
But also, like, if you say, okay, this is completed base, reversal is in, that's the target. Yep.
Okay, good. Okay, that brings up another discussion. If that's the target, so if we get there, should we be taking profits when we get 260, right when our calls go in the money?
I don't know. It always depends, right? I like to see how it reacts at the level.
All right, here's how I would do it, Straza. I mean, my quick reflex, here's how I would do it. I would buy these January calls. This is January of next year. So, well, 12 months from now. We could pay about $1.75 for them. And we would use that 48 level as a risk management level. So tight stop. This is either going to start working right away or not at all.
Yep.
And I would exit the position. I would stop out for a loss under two conditions. One, we break 48, like I just said. Also, if these calls lose 50% of their value, right? So we're paying $1.75 for them now. So if they trade down to about, I don't know, 85 cents or so, I'll probably pull the plug and get out because, theta is just, slowly eroding these things. And that probably a good sign that the breakout is not happening the way we anticipate. Meanwhile, what I would do is if and when Wells Fargo does trade up to 60, to or through 60, I would sell enough of my position to pay me back for my investment, right? So let's say I buy 10 contracts.
Yep.
And when this thing, let's say it gets up to 60 by July, I'm just making up times, right? Like by the summertime, it gets up to $60. And let's say those calls are trading at $5 a contract, which is not unreasonable, right? I would sell 2 or 3 contracts of my 10, pay me back for my original investment, and then I got a free ride on the rest.
100%. Yeah, I love that. That new strategy of yours.
I think that's the move because if we do get up to 60, I mean, you said that that's a natural spot for us to hit some resistance, and I don't disagree. But if we clear that,
should keep going. Yeah, absolutely.
We'll do the bank version of mooning.
Well,
not as sexy as a crypto, but
look at Silvergate before it went to zero. It used to trade like a crypto.
Yeah.
So you would expect, right? 60 is 20% away. If this is a brand new trend reversal and this is a new uptrend, you would expect, and I know it's Wells Fargo, it's pretty low vol, you'd still expect more than 20% in a year.
Well, I mean, look, even just off of the spring lows of this past year, we're up, what, 40%? Am I doing my math right? 30%? So another 20% from here is not a crazy.
Yeah, 40%.
40%. So it only has to do half of what it's already done over the past year. And if you look at this chart, it feels like it's just getting going.
Yeah, another 40% would put us at 70. Let's real quick before we hop, help me out. Let's now do something the same but different. Let's use Key Corp, and this chart looks a little bit different. Whereas unlike Citigroup, there's just a lot of dead bodies up here, right? Look at the left-hand side of my screen. It's one thing for the base to be in, the reversal to be in. This one's going to probably, you're going to need to be patient with it. It's going to work through all this stuff to get back to these old highs. So with Key Corp, I would think shorter term, right? Let it just kind of fill this memory pocket here. and I could zoom out in a little bit and show it better. What if we're just looking for a little run, through this zone of, low volume, back up to
I don't love the Key Corp as much. So Wells Fargo definitely feels like the cleaner trade to me.
cleaner chart.
Yeah.
So what if you wanted to play Key Corp, a rip out of this flag, quick run back to about 16? It's only $1.50 from here. So you're looking
I'm not sure it's worth it. I feel like to profit on that trade, you got to get more shorter term options and you got to nail the timing. Like you got to get it like the day before it breaks out.
100%. That's how those trades work for sure.
So all right, Wells Fargo, you talked me into it. I like this Wells Fargo trade, the January 60s, $1.75-ish. Might have to pay up to $1.80 at most, I think, right now.
Yeah.
I like it, and we'll follow the plan that we discussed. We stop out if we lose 50%. We stop out if we lose 48, the price level 48, and we're holding to 60. At which point we'll take a little profits. How's that sound? Does that sound like a good trade? I like it.
Yeah.
All right. Hey, I was just cruising through chat here, active chat today, which is great to see. I did see somebody asking about Pfizer. I'm not sure if we talked about Pfizer on a flow show, but I will answer the question for the guy that was asking. In All-Star Options, we had a bullish risk reversal on in Pfizer, where we sold the 27 half puts and used it to purchase, was it 32 calls? I forget. But either way, we stopped out. When we closed below 27.50, I believe it was on Wednesday or Thursday of last week, we closed below our level and we're out of the trade. So thankfully it was not a large loss. It was I think we only lost like $1 on the whole operation. But hey, I mean, we were making a bet that this low here from early December was going to stick, and this was this little holding pattern here was going to whipsaw higher. The market disagrees with us. So we're not going to fight it, especially when we're holding naked puts. So we are out. For anyone who knows about that Pfizer trade that we were in, we are out of it. And if you are in it too, still, what are you thinking? Get out. But I'm not your financial advisor. I'm just telling you what I did. I'm out.
In healthcare, the laggards kind of keep lagging. I'm zoomed out like 10 years on Pfizer, and the leaders keep leading. We were making the bet that Pfizer would dig in at a logical level of support and play a little catch up, to the stronger names in the space. You look at something like Merck, we always ask ourselves that question: do we buy the leaders or do we buy the laggards? For this one, we could definitely look back and say, well, we should have bought the leader, right? Because look what Merck's been doing. So,
hey, in chat, Curtis said that was the first time I've ever done a bullish risk reversal. Man, I'm sorry that was your first experience. We've had a lot of success with bullish risk reversals over the past year. It's been some of our better trades, but sorry that this one was your first one. At least there was just a little flesh wound, just a small little loss.
Don't give up on them too quickly. Those are some of the best trades, some of the biggest winners. For sure.
Yeah, I mean they're a little bit riskier, right? But with risk comes reward, and we've been rewarded very well. I mean, our meta trade last year was amazing.
Okay.
Yeah.
All right. You got anything else?
All right. No, that's it, buddy. Glad to be back in the rhythm. Hopefully we'll get a good run of a bunch of Mondays in a row. I don't think we have any holidays coming up. I don't know. We'll see. All right. Well, this has been the Flow Show. He's Steve Straza. I'm Sean McLaughlin. Follow us on Twitter, @Straza, Options Sean. If you have any questions, you could always hit us up there or shoot us an email at All-Star Charts, info@allstarcharts.com. Also, if you want to sign up for our free email, our options email newsletter, you can do that as well. Just shoot us an email, info@allstarcharts.com. All right, Straza, great talking to you. Thanks, everybody. We'll do it again next week.
Later.
See ya.